Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. In today's video, I'm seeing signals that we are on the verge of an October 10% correction in the S&P 500, and I'm going to show you the technical data-driven analysis that will show you why that's the case. This is going to be a remarkable video, and again, it blew my mind when I saw this, so I got to share it with you guys. So let's dive into the S&P 500 chart. On one side, we have the current drop from Liberation Day high to low, and then ultimately the big rally back. And what we see here, this is 2020, the COVID collapse and the rally back to the upside. Now, one of the things you'll notice is that the distance or terms of time, the time from this low to this current candle here, the high from yesterday, that is almost identical to this low to this high. Now, the big question is, okay, so we're basically 6 months after each of these events, the low here during COVID and the low during the Liberation Day sell-off 6 months later. Now, the question is there a confluence of factors that make this drop and pop the same as this drop and pop as well? Let's find out. So first and foremost, what do we want to do? We want to measure, right? So let's do our measurement so that I can show you guys. So from this low to this high, it's 114 candles, right? 114 bars on the daily chart. From this low right here to this high right here, we are now at 115, right? Yesterday was 115. So virtually the same. Literally within 1 day, that is the exact distance. Incredible stuff, okay? In terms of market trading days. Now, okay, we know that the distance is the same. From this low to this high, from this low to this high is the same. Now, let's start doing some mathematics, basic, simple mathematics. What we see is during COVID, the markets dropped basically, let's see here, if we move this over, 35 and change percent. Okay, we then rally back. What did we rally back? We rallied back to this high here, right, which was that 6-month point, 63 and change percent. Now, there's a ratio here. How much did we drop to how much did we pop? And I'll show you this, guys. If you take the drop of 35, we'll do 35.4. So 35.4. Okay, oops, 35.4, and we multiply it by a ratio of 1.8, we get 63.8, right? So it's a 1.8 multiple on the drop to what we popped in 6 months. Now, you might say, okay, big deal. So let's remember 1.8, 1.8. Now, if we go over here and we take the drop that we saw during the Liberation Day sell-off from the previous all-time high, what do we get? We get 21.35, okay? Now, if we take that same 1.8, all right, we take 20, so what was the drop? 21.34, we'll say. We'll do 3.5, so we'll round it up. Times what? Times what? 1.8, right? 1.8. That should give us this move up, okay? Let's find out. Let's do that measurement. If we take the range, we go to that low, bring it up. Look at this, guys. Look at this. Look at this. Look at this. Literally, this multiple from this drop, if you multiply it by 1.8 in exactly 114 candles, we went up 1.8 times, which gives us this gain of 63 and change percent. And here, from the high of Liberation Day to the low, you drop 21%. If you multiply that by 1.8 as well, in the exact same time frame, what do you get? You get 38.5%. I mean, look at this. This is incredible, guys. All right, now, what does this mean? What the heck does it mean? Well, if history repeats, what did we see here? From this rally up, look at what the next move was. If we do a measurement here, we see, what do we see? We see a drop of 10.5%. And so in theory, we should see some sort of pullback. Now, again, this bounce has been percentage-wise less, right? So it might be a slightly smaller pullback, but we could be looking at as much as a 10% drop in the S&P replicating. And again, all I'm doing here, folks, is I'm simply just taking the drop and the multiple, which gives us our exact move up. And then what happened after that 6 month? We had a correction. In the case of here, over 10% in 2020, basically September 2020. We're now coming into October. And remember, COVID was in February to March. Liberation Day was March into April. So it makes sense it would be 1 month later. So instead of September, this was September sell-off. Now this would be the same time frame would be October, and that would yield a drop of anywhere up to 10%. This stuff is crazy. Like legit. Did you guys just see how in 20 like I mean, where is this coming from where the drop and the pop following in exactly basically 6 months of trading gets us that. And you might say, well, 114 days, that's 114 market days. So then if you add in weekends, et cetera, and holidays, that's how you get 6 months, right? But the point being, again, is it's the same. The percentage drops were different, but the multiple of 1.8 was the same and the time was the same. And what we saw again in 2020, 10.5% correction, makes me think coming into October, we're looking at a correction that very well could be as much as 10%. Wild stuff, guys. If you're, I mean, you guys can see how excited I get by this stuff. I love this is what I look for in charts. I do all this analysis. I look at comparing past. I'm a big history buff. By looking at past can sometimes, again, past doesn't always dictate the future, but oftentimes, as they say, it rhymes, and that's why we use it in charts to predict future outcomes, or at least give us a probability on a future outcome. All right, guys, I wanted to get you this video. So exciting, so amazing. Again, be ready. October likely looking like a pullback, decent size correction month. Let's put on our seatbelts. Have a great rest of your day, guys. Thanks again for tuning in. Follow me. Give this to your friends. If you find it interesting, send this video all around. I would appreciate that from the bottom of my heart. Comment, like, whatever you guys can do. Much appreciated. Take care.